So Matt, welcome to the webinar. First time for you speaking at Round the Clock Trader. It's good to have you here. We've heard from some Forex traders already this morning who are cautionary, shall we say, about the crypto markets. It seems to be the volatility which seems to be the biggest concern. But of course, you are more supportive and more confident that the potential of cryptocurrencies is something that we should be looking at longer term, either as a trader or an investor. Just by way of a background, I know you come from an engineering background, you worked in sort of oil and gas sector, but now pretty much this is your full-time commitment to working with Steam and the Steemit community. Shall I let you probably make a better job of explaining how you fit in?
No, that's fantastic, Simon. Thank you very much for the introduction. It's much appreciated. The presentation I'm about to do isn't necessarily about Steam. There's a small section on it. It's generally about the fundamentals of Bitcoin and why it's become so popular, and explaining some of the downsides of Bitcoin, and then discussing some of the other currencies that are coming up into fruition in place of Bitcoin potentially, and what they do as in terms of fixing the problems that Bitcoin has. And then a little bit about trading, about some of the trading techniques that I use, and then there's some more about what blockchains are. As you know, if we have time to get through, we'll go into that. But hopefully, we'll give the audience here today enough information so that they can go and trade. I'll tell them where they can trade, where they can store their bitcoins, some of the techniques they can use to trade, and then some of the fundamentals of Bitcoin and cryptocurrencies.
Sounds absolutely terrific. Matt, let's just get started. And as we normally do, if there's questions arise, I might jump in with a question if it's relevant to what we're talking about at the moment. But in the meantime, I'll hand over to you, Matt Starkey. Thank you for joining us. The floor is yours.
All right, thank you, Simon. And of course, if there are any questions, please ask them. And if, Simon, you feel there's any relevant ones, I'm more than happy to do my best at trying to answer them. The other thing I wanted to say, I was listening to George's presentation just, and a lot of the sentiments that he's talking about, I echo as well. And I've kind of thought we should have done a double act because it's really some good stuff in there. So thanks very much, George, for doing that presentation. Before we start, disclaimer: I'm not a financial advisor. This is essentially my hobby, and I'm just telling you my opinions. So don't take any of this as financial advice. I don't want to hear anyone coming back and saying I invested because Matt said. Right? I want you to do your own research. This is just going to give you the tools to do that research and go forward from there. So with that, I'll move on to the next slide, if I can. Yeah. So the first thing, I've got a link here which I'll provide to you after the session. I'll let you know details of how you can get these links. But basically, it's just a video. I'm not going to play it here, but it's got people like Tim Draper, who's a multi-billionaire hedge fund manager, Bill Gates and Richard Branson over here. They're all positive on cryptocurrencies. They're positive on the blockchain technology that underlies the cryptocurrencies. Not necessarily positive on Bitcoin as such, but they're certainly positive on the technology overall. And there's a lot of other names getting involved now. There's a lot of companies getting involved, big mainstream companies that are starting to get involved in this sphere. They're starting to realise that it is going to change the game, and they need to get involved and catch up quickly. So this slide's called the why, why cryptocurrencies. And essentially what it does, the fundamental thing that it does, is it removes the third party. It decentralises any centralised system. Now the problem that we've had in years gone by is that any centralised system becomes corruptible. So again, with the central banking system we've just heard from the previous presentation, it's they're making a mess of it, and it's what always happens when you put centralized power in the hands of a small group of people. So what cryptocurrencies does is it divulges that power to the community at wide that uses that service or that centralized power system. So basically, as we go forward in time, everything's going to become decentralized. Anything that is centralized today is going to become decentralized, just because you're going to remove essentially the corruption from the systems that are built in today. So there was a website that George was just talking about, which is the US Debt Clock, which I just want to go to here. So again, the links will be provided after the session. So you can see up here, this is the US debt, $20.6 trillion. God, the last time I looked it was 20 trillion. Now, the theory is that you can keep producing new money and adding debt to it, and everything's going to be okay. It's what funds, you keep injecting this money into the system after 2008, and it's keeping the system afloat, right? Now, that's the theory, and it is just a big experiment at the moment, and all of our lives are resting on this experiment that we can just keep injecting debt into the system and it's going to keep growing. Now, the problem that you have is the rate at which that debt is being injected. Is it sustainable? Is it something that's sustainable such that the interest rates will be kept low enough such that the taxpayers can keep paying those interest rates with their salaries? And so just to give you an idea of scale, that's your $20 trillion, and this is the speed it's going up. I'm not joking, this is the US debt clock. The other thing that I think is important here is the monetary base. So this is the liquid monetary base, which is 3.8 trillion. And this is the M2 monetary base, which is, it's a bit less liquid, but it's basically the money supply in the US. So there's $14 trillion available in the US that's liquid money. That is basically what, part of that is what US taxpayers use to pay off the debt. And there's $20 trillion of debt. So the point I want to make on this slide is that there is less money in the system than there is debt. There's always more debt than money. So you can never actually pay the debts off unless the government destroys it. So that's their plan going forward, to destroy the debt. And they've got several programs in place to do this. But as I'll go on to show you now, it's not necessarily the case. Just before I do that, I want to show you the world debt clock. So these are all the different countries. This gives you an idea of their debt to GDP. So it's kind of like if you think of each country as a person, if you've got, say, a salary of £50,000 every year, and you've got £50,000 of debt, it means that your debt to GDP rate, your debt to GDP is 100%, right? It's going to take you a year to pay your debts off. So as we scroll through here, you've got the US has got 100% debt ratio, China 13%, Japan 82%, Germany 159%, UK 267%, France 226%, countries like India 17. So you notice these developing countries like China and India who are coming to the forefront, they've got very low debt ratios, whereas the Western countries with these mature economies have got really, really high debt ratios. Let's have a look at another couple. So Belgium 300, Greece 300. So this is all the problems in Greece because they've got a 300% debt ratio. So they've got three times more debt than they make money every year, basically. Ireland is amazing, nearly 900% debt compared to its GDP. Let's have a look. Russia's here, 28%. Yeah. So that the countries with the low debt they're essentially freer from the economic system that we all currently exist in. And then I think there's a couple more down there. But it gives you an idea of how much debt the world's in. And I mean, would you give these people your money if you see people with 200, 300% debt to their salaries? Would you loan them more money? Are you going to expect them to pay it back? At a certain point, it starts to become unstable and unsustainable. So after 2008, things changed a lot. What I'm trying to say here is, again, the money supply is very low and the debt plus the interest on that debt is very, very high compared to the money supply. So we can never actually pay the debt off ourselves. It would need to be government intervention to pay the debt off. Now, this started with the Federal Reserve in 1913, where they used interest rates to essentially control the money supply, or should I say use the money supply to control interest rates by essentially being able to purchase their own debts. And the interest rates have been kept under control through the money supply over years and years and years until 2008, where the money supply started increasing in order to cope with the problems in 2008. And you can see the money supply has just gone off the charts ever since. Now, this money supply hasn't come into the kind of immediate economic system yet, but the bet is that it won't and everything's going to be okay. But this money is hanging around there in sort of semi-locked up securities and investments and trusts and things like that. And if these start getting liquidated, this will flow into the money system and potentially cause inflation. This is the US debt. So to give you an idea graphically of what's happening with the debts, does this look sustainable? Is this a sustainable chart? In my opinion, no. This is the interest rate. So because we're creating so much debt, we're managing to, because we have this QE system where we're buying our own debts, we're able to keep the interest rates really, really low. But of course, you'll see here, this is since 2008, interest rates at virtually zero. Is that sustainable? I think some of the people who were around in the 80s will tell you no. And eventually interest rates will come back up again, a sentiment that George was talking about in the last presentation. So what this goes to next, we don't know, but it's going to be, there's so much leverage in the system that when these interest rates go up, the cost to cover those bets, it's going to be tremendous, and it's going to wipe a lot of people out because greed will get the better of everyone, and that's what's happening. We're basically on the precipice at the moment, and we're set for this to sort of potentially become a massive catastrophe in the near future. We're solving this by essentially creating more money. The more money in the system, the less it's worth. So the value of that money goes down. So just to give you an idea, a loaf of bread in 1973 was 11 pence, and now it's £1.03. Sausages 58 pence, and now it's £4.89. Yeah, and you just go down the list. Everything's increasing in prices, and it's not because the prices are just increasing. It's because there's more money in the system, and therefore the value of the money is lower. And so as a result, things are costing more. Your bread costs more. And this is actually, it's a slow theft of the people's value. So if you imagine that, let's say you had £10,000 in an account, next year, the value of that £10,000, it's still going to be £10,000, but it's going to be worth less. Now, the people who are creating the money at the central bank, they get that new money at full value. And the reason they get it at full value is because they print it today and they spend it today. By the time it gets to be part of your £10,000 savings, it's worth less 3 or 4 years later, right? Now, this is actually a theft of the value of your money into the hands of central banks. And it's essentially, in my opinion, it's an immoral thing, but it happens so slowly that people don't really realise or care. And they just say, why are prices going up? Because they go up. They don't really have a reason. Well, this is the reason. The central banks are printing money, giving it to their close associates to fund their so-called economy. But what it does as a result, because the money printing's gone so out of control, now the value's really getting transferred from your account into their account. And so, your money's going to continuously be worth less. So another couple of points on this slide are, the supply of money governs the value of money, supply and demand. The Federal Reserve was created in 1913, 2 days before Christmas Day, when everyone was on holiday. And it kind of seems a little bit sketchy to me. And this whole thing about, money printing, the money's worth less every year, you can see it. I mean, it's there, clear to see, clear as day. It just takes a long time to happen. The Federal Reserve has never been audited. And there's a big campaign to audit the Fed. But of course, we all know that if we audit the Fed, there's going to be loads of skullduggery going on and it'll be a massive scandal. And so it never gets audited. And this is the point of blockchain again. A blockchain is not centralized. So it's constantly audited by all the people that benefit from the system that blockchain operates on. So it's completely public in most cases. All these blockchains that you see all over the place, nearly all of them are public. And so they're constantly audited by the people, and therefore they're transparent and they're not corruptible, or at least the community can ensure they're not corruptible. Again, it's a slow, invisible theft of value, the current central banking system. So why Bitcoin? The reason that Bitcoin is attractive is this curve here, this chart. So it's modeled on a gold mine, basically. So when you first find gold, it's very easy to get out the ground, but as time goes on, the deeper you dig, the less you can find, and eventually the supply becomes restricted. And this is the reason that gold has value, because over the years, the supply is slowly restricted. It's becoming harder and harder to mine gold out of the ground. Well, this is the idea with Bitcoin. Bitcoin is created on a constant basis. Every 10 minutes, there are new Bitcoins created. And there's a computer algorithm that everyone controls that operates the Bitcoin system, which is millions of people all over the world. And it regulates the amount of Bitcoin, or at least the rate at which those Bitcoins are created. And this is the curve that it's based on. So basically, initially in 2009, when it was first created, you had Bitcoins being created at a very rapid rate. And then you had this moment called the halvening, where the rate of Bitcoin creation was reduced. So now we have this slower rate, and then again it happened recently, and now you have a really slow rate of Bitcoin creation, to the point now where we have 16.8 million Bitcoins in supply in the year 2018. And as time goes on, you can see that rate gets restricted and restricted. So effectively, Bitcoins become rarer and rarer as time goes on, until the year 2039, which is long time in the future, not to be too worried about. But there will be a cap of 21 million, and no more Bitcoins will be created. It is impossible to actually create a new Bitcoin after that time. Whereas basically here we'll start to feel the squeeze, towards the end of sort of 2010, 2020, 2030, it will all start to squeeze in, and the supply will really, the restricted supply will really start to be felt. The other thing is as well that people lose a lot of Bitcoins. So estimates are today that there's actually, yes, there's 16.8 million Bitcoins in supply, but once you lose your keys to those Bitcoin wallets, they are gone. There's no bank you can call up. It's your own money. It's outside of a system, so you can't just call anyone up and get that money back if you lose it. So as a result, the estimates show that there's about, actually not 16.8 million, but about 14 million Bitcoins. And by the time we get to the 21 million, so many will have been lost. There's probably actually only going to be about 15 or 16 million in supply that are available to trade. And so there's going to be a really, really tight supply of Bitcoin. And that's the point, right? Is that because no central banker can keep creating new Bitcoins, the value should go up over time as demand increases. As fiat currencies become printed more and more and more, and the value of those go further and further down because of this central banking system. So centralization. This is your current centralized model here, with us being the users around the outside. So centralized source that is corruptible or can be manipulated, which is what we have today. Here we have a decentralized model, which basically shows that there's no leaders. It's all peer-to-peer. The systems are owned by the people that use those systems, be it Bitcoin or some of the other coins that I'll go into in this presentation. But the idea is that it's owned by the people. It's owned by everyone that uses it. And so there's no centralized source that's corruptible. The blockchains that I use are generally public blockchains, so everyone can see what's going on. It's auditable. It's clear. So the benefits of Bitcoin and blockchain. It's outside the banking system. I think that's clear. It's trustless, so you don't need to trust the centralized authority. You trust the system, the algorithms that are built on the system. So essentially, you're trusting mathematics, not people. There's a possibility now to have multiple signature escrow services. So basically, it means that an account can hold your coins, and then if 2 or 3 other people sign off on that, then the money can get sent. And if they don't sign off, the money is impossible to send. Holding crowd funds until target reach. So you can crowdfund, and if targets aren't reached, there's algorithms that you can build into these wallets now that will automatically send the money back to people. You can have inheritance long after you've passed away. You can say, right, in 30, 40, 50 years from now, you can give a specific date and then release the coins in that wallet to your loved ones at an exact time. You don't need to have a lawyer or a contract or anything in place. It will just do it all on the blockchain automatically. You can have anonymous payments. So this is important for example, we have the removal of cash from our societies at the moment. Cash ensures anonymity, so it allows you to keep your privacy and therefore ensures freedom within a society. As time goes on, we're starting to remove cash for the convenience of credit cards, but that means that all of our activities and payments are tracked. So as a result, you lose your privacy and you lose your freedom. Whereas these cryptocurrencies, many of them have pure privacy transactions, so it's impossible to track who sent what money to who. Now, of course, you have the problem with terrorism, them saying, oh, it's a terrorist currency. The terrorists are all using Bitcoin and blockchain technology to interact with each other. But in fact, the biggest currency for terrorist activity in the world is the US dollar by far. Yeah, all the drugs and all the terrorism is conducted using that currency. Very little is conducted currently with Bitcoin, and of course it will increase as time goes on. But this is the nature of the beast, and I think that it's the US dollar, the use of the US dollar in terrorist activity far outweighs the issue with the Bitcoin. So it's kind of a red herring. Removal of the middleman we've discussed a lot just previously. The fees to move this money around in Bitcoin, they're quite low compared to the current money system, but in other blockchains it's free to move money. It's a zero fee. In Bitcoin, it takes about 30 to 40 minutes to move the money, but in other cryptocurrencies, it's 3 seconds. So now we have the ability to move money anywhere in the world for free in 3 seconds flat. Right? The banking system will not be able to cope with this competition as time goes on. Other things, this is the last page of benefits. So you have patenting and timestamping. If you have an idea and you put it on a blockchain, it will stand up in a court of law if someone else takes your idea and steals it. Because once you've put information on a blockchain, it is immutable. You cannot remove it. So if you come up with an idea and you put it on a blockchain, it's there forever. There's no getting away from it. It's there. So as a result, if you then lose your intellectual property to someone else and they start making money off your intellectual property, you can take that blockchain timestamp and show the contents of it, and everyone in the court can see that it was your idea and you came up with it first. So it will be used for patenting in the future. Decentralized exchanges. So all of these exchanges, they will all become decentralized and peer-to-peer. We will no longer have centralized exchanges that we currently use, which can be manipulated and set up in the favour of the large institutions against the small traders, the small retail investors such as ourselves. In the future, all of these exchanges, and many of them already are now, they will be decentralised. Stock certificates. When was the last time any of you saw stock certificates? They're just held by the exchanges, if they're even held by the exchanges. It means that's also open to corruption because people can create new stock certificates out of thin air behind the scenes and then sell you the stocks on the exchanges. So you don't have the restriction of supply necessarily that really exists in reality. It means that there's a certain amount of stocks on the market that are oversupplied illegally. This is all corruption and manipulation. In the future, all stock certificates will be on a blockchain that everyone can see how many there are, and it will be peer-to-peer trading rather than through a centralized exchange. Again, futures as well, highly open to manipulation. If you can print enough money and sell enough futures into the market, you can manipulate the price of things like gold and silver down, which has clearly been happening over the last several years. There's mountains of evidence to show that. And then also, there's always talk about regulating cryptocurrency. Well, the regulators are corrupt as well. You just look at 2008 and what happened, and the deals that were going on there. It's all been allowed to happen by the regulators. There's something like, there's estimates of 1 quadrillion derivatives in the market. On the books, there's something like 300 trillion officially on the books of derivatives. Well, where were the regulators when that was happening? Why didn't they step in and stop these derivatives from being created? That it's going to end up in catastrophe for the system because it's just unsustainable. But of course, the regulators put that one under the market, but they're happy to regulate Bitcoin. Now, what I think will happen is that we will start regulating ourselves. We will have decentralized regulators where the people will develop reputations on blockchain technology and they will start regulating themselves. This will bypass regulators and expose the regulators of today for the frauds that they've become. Another issue is automatic insurance payouts. So if you have an incident happen, you can obtain an automatic payout without having to go through a third party. Because again, it's all peer-to-peer. You'll be able to store your property on the blockchain, and you'll be able to transact property by transacting the private keys of the wallet rather than having to go through a lawyer and an estate agent. We'll be able to mark coins as specific properties in the future. So I know that also at the moment countries like Estonia and some others in Eastern Europe, they're putting their whole property market on a blockchain. Equal access to finance. So blockchain doesn't care where you're from, it doesn't care who you are, and it doesn't care what the colour of your skin is or what sex you are or anything. It treats everyone equally the same. As long as you have an internet connection, you can get access to a blockchain wallet and therefore you can get access to funding. Whereas in the current system, you have IPOs that are very restrictive. You have banks set up. The SWIFT system is set up in only certain countries. And so there's, a centralization of power. And the whole thing behind blockchain technology, it's about decentralizing and allowing people to get involved that couldn't get involved before. So, for example, if you want water lines in your Saharan African village, you can create your own IPO, which is actually called an ICO, initial coin offering, rather than an initial public offering. But we'll talk about that a little bit later. So now you can give charitably directly to the people, literally directly to the people that you want to give charitably to, rather than through charitable organisations that we've just seen with the Oxfam scandal, consistently showing themselves to be corrupt because they're centralised organisations that are subject to corruption over time. Changes the function of bankers, lawyers, and stock exchanges, and brokers, underwriters, and other barriers to finance, and it frees them up to get involved in more complex issues. It removes government from conflict resolution. Excuse the spelling on resolution there. So what you have here is essentially today we rely on a centralised government to resolve our conflicts, and as time goes on we will rely more and more on peer-to-peer blockchains to resolve our conflicts, rather than, again, a corruptible centralised government. The other thing that it does is it removes usury. So you can't, with Bitcoin, for example, you do not issue Bitcoin with debt. It's just Bitcoin, right? The current monetary system with fiat money, it's issued with debt. So any new money you create, I just showed you before in the chart, you always create more debt. And as a result, everyone's a debt slave, right? We've all got to pay our taxes to pay the debts of our governments off. Bitcoin doesn't work like that at all. It just creates new Bitcoin and issues it to the people that supported the network. There's no debt involved. And then, again, no interest-backed money, which we just touched on. So rather than me going on about the good things, what's the downsides to Bitcoin specifically? So the problem that Bitcoin has, it doesn't have a governance structure. So it's kind of like online chaos, where you have lots of arguments going on about how to improve it, how we can go this way or that way, and there's lots of disagreements. There's lots of vested interests that can't agree on a way forward. So Bitcoin's development stagnates, and of course, if you're stagnating, you're going backwards. So Bitcoin's really struggled with that over the last couple of years. As it's become more popular, the transactions have gotten slower, and now you can have something like, it used to be like 5 or 10 seconds wait to transfer money, and now it's about 45 minutes, which is still faster than the banking system, I add, but it's not the point of blockchain. The fees are getting higher. So at the moment, right now, the fees are about 10-15 cents to send a transaction, but a few weeks ago it was like $15 to send a transaction, which again defeats the point of blockchain. So Bitcoin's susceptible to these swings in fee, exchange fees and transfer fees, depending on the demand on Bitcoin at the time on the network. You have a lot of unconfirmed transactions because, again, there's a high demand, so the miners can't get to the transactions to process them. Your transaction times are high. So what we have now is things like Bitcoin Cash, which is a fork of Bitcoin. It's an alternative to Bitcoin, which is trying to solve the problems that Bitcoin has. Again, there's downsides to that, which maybe if we have time we can go into later. The other thing is that with Bitcoin, you have the people that support the network called the miners. It used to be just people doing it on their computers, but as this has become a really multi-billion-dollar business, more and more people have started. It's become industrial, right? The mining has become an industrial process. So you have these huge companies now setting up mining in China, in Iceland, in certain parts of the world that are maybe not necessarily where we'd want to have Bitcoin based. We want Bitcoin to be spread all over the world, but the problem is that it's becoming centralized because the mining process is taking place in certain countries on a mass scale. So Bitcoin essentially isn't decentralized, or as decentralized as we like to think it is. Again, some of your people, Simon, were talking earlier about how the price is very volatile, so that's not a good thing necessarily for longer term investors. And then, of course, you've got the lack of regulation. So that's something that's in the press at the moment. There's a lot of regulation coming in. I think that's a good thing. It's a sign of acceptance, and it looks like that will do the currency wonders going forwards. So if I go, what I want to show you is during this presentation are a couple of resources that I use to find out about cryptocurrencies. So one of them is CoinMarketCap. It lists all of the coins on it. So I'll just click on that now. And the idea is that if you guys want to use this, you're welcome to take a look. I can go separately in a separate webinar to show you the details of how I use this professionally to find out where there's opportunities in the market and all these types of things. But for this presentation, I'll just show you that it exists. Not a good day in the markets today. These are the types of volatility. This is typical. So you can have 7% down days. So whatever money you do put into these currencies, please make sure that you can afford to lose it. Don't put more than you can afford to lose. Don't be like the suckers that were buying Bitcoin at $20,000 and lost all of their money or half their money. I'll maybe go into a bit of the psychology about how you can avoid that in future a bit later on. But yeah, these are all the coins. And there's so much happening that I can't even keep pace with them. So some of these in the top 20, I don't even know what they do. But you've got things like Ethereum. Ethereum is a blockchain upon which other blockchains are built. You've got Ripple. Ripple is being used by the banks to increase the speed of transactions between the current banking system. Bitcoin Cash I was talking about before is an alternative to Bitcoin, a little bit faster. Litecoin is another alternative to Bitcoin. It's like if Bitcoin was gold, Litecoin would be silver. Let's have a look. Dash is a self-funding mechanism, so it creates new money and has a voting system that can allocate new money to projects. So there's a continuous growth cycle there that these projects can make money of their own. What else we got? Yeah, I mean, I'm actually getting a bit out of touch here because I can't fluently speak to you about all of these. Steam, for example, is a social media currency. So there's actually social media on a blockchain now. So like Reddit or Facebook, you can go and interact with each other and get paid for posting on social media through Steam. Populous is the invoicing market. So at the moment, the banks have cornered the invoicing market, where basically if you can't pay your bills that month, you can go to a bank and the bank will buy your invoice and then charge you a little bit of interest. So when you get your next bonus, you can pay that interest off and the banking loan. Well, Populous has come up with a way of doing it on a blockchain peer-to-peer. So now you don't need the banks to buy and sell invoices anymore. And I can go on forever about all these coins, but basically take a look at CoinMarketCap. You can click in, you can find all the details about the coins there. These are some of the exchanges that I use. I use Uphold primarily for the UK to send money to and from cryptocurrency trades back into pounds. You can use GDAX. Local Bitcoins is where you trade peer-to-peer. There's no exchange. Bitstamp is an exchange. Again, GDAX is an exchange. Wirex is similar to Uphold. It's got its own card issued to it, so you can spend on the card and exchange pounds to Bitcoin. And then Coinbase is an exchange. So you can take a look at those in your own time. I won't go into too many more details now. Some trading techniques. They're fairly basic. I'm going to show you here. A lot of it is about following the market and understanding sentiment and understanding when there's blood on the streets and understanding when there's euphoria, because Bitcoin's very volatile. So if you can stay on top of the euphoria, you can sell to the people who are getting euphoric and buying. And if you are staying on top of the fear, you can buy from the people who are selling out of fear. But you have to track the news in Bitcoin and do it on a regular basis. So if I just take a look at a couple of... so this is the Bitcoin chart over the last year. And George also was echoing the sentiments in the last presentation regarding to trading very, very rarely. So what happens is when people get into Bitcoin, because it's very volatile, they want to trade 3 or 4 times a day, then you lose all your money and it's a terrible disaster. Or you'll buy at the top and then the price drops, right? So what I started doing was just looking recently at, you know, where would be a good place to buy Bitcoin over the last couple of years. Let's have a look at so you find the downtrends and buy as it breaks the down. So you'd be buying in this region as it breaks a whole number. So 2,500 in that case. Your risk is below this low, and then your profit target is just a case of letting it run. Again here, you wait for the downtrend to break. Your risk is below this low. Your entry point is the break of the downtrend line, and this round number is 4,000. So you'd have bought at 4,000. Again here, your trading location is around about 5,800, maybe 6,000 at a push, and your risk would be 5,200 or 5,300. Let's have a look at another couple of options. This is maybe a little bit of a steep downtrend, but again, the break of the downtrend is there. 6,400, so 6,500 is a round number that you would enter, and the risk is at 5,300. And this is where you don't trade. When the market starts doing this, when it goes up like $3,000 or $4,000 in a day, you want to be selling, because that's a euphoria. It's craziness. So this is all the kind of the new people getting involved that don't understand what they're doing. You need to be selling to them and buying when they get scared down here. The only other thing that I want to show you here. So Bitcoin just broke the downtrend from its drop. But the round number, I always work around round numbers, the round number would have been 12,000, or to see a nice consolidation before it breaks above 12,000. So at the moment, it's having a pretty bad down day, which is why you saw on Coin Market Cap that we've got negative numbers everywhere, because you've got a big down day here. And what I'd expect Bitcoin to do was come back to maybe 9,000 or so, hopefully base again, consolidate before it breaks the downtrend line, and then your round number is either 10,000 or 11,000 as it goes up. And this is what you need to be thinking when you're trading this currency: is where could it come to? Maybe, I don't know how much you know about support and resistance, but there's clear support here in this area. So maybe you look at support at 9,000. So what would be nice if it came down to 9,000, consolidated, started to break above 10, and maybe there's a nice pattern to buy as it breaks above 10 there and goes. Your risk would be at the 9,000 level, and so on. So you need to be thinking in these ways ahead of the game to try to actually predict the way you trade. But the point I'm trying to make from showing you this is, one, there's how many opportunities were there to trade Bitcoin? 1, 2, 3, 4, maybe 5 or 6 in the last year, right? I know people that trade 6 times a day, and you should be sitting for months on end with your hands underneath your bum, waiting for the opportunity to buy on these nice pullbacks here. I wouldn't buy on this pullback because it's not broken the downtrend. This is the downtrend. So when it starts getting into this area, that's when you're looking to get back in. This is kind of another type of play, which is called a fear play. So you're catching a falling knife here. Some people don't like to do that. I follow the Bitcoin market enough so that I understand that when this is happening, you can buy it right at these lows. You'll see massive volume coming in as the sellers exhaust and there's no sellers left. So then there's only buyers, and you can get right into those markets with relatively small risk. But the chances of winning those trades are quite low. So you have to decide in those moments what type of risk you're taking. As long as you're only losing money you can afford to lose, then you can be in the right psychological state and behave yourself and start trading like a sniper or like a pro, rather than like an emotional person that's got too much money on the market, which is what most amateurs do. Okay, so I'll just go back. Is there a question there? Yeah?
Yeah, this is great. We're getting some very positive feedback on the presentation. It's great. Greg says the presentation is really helpful in this space. But unfortunately, we've only got limited time, so I'm going to get to some of these questions in the last 3 or 4 minutes, if we can. Ian, going back to, you were talking about the public debt and external debt to GDP. Could you just explain the difference you meant between public and external debt?
Yeah, so if I go to the debt chart, the debt clock, I think it was this one. So this is public debt and this is external debt. So public debt is basically debt that is owed by the public. It's put out on the behalf of the public. So it's for public projects and things like that. So I would, again, I'm not a financial advisor, but I would assume that's things like paying for hospitals, paying for public projects, right, that are going to be used within the country. Mm-hmm. External debt is where we put that debt out onto the international debt markets and you can trade it. So US bonds, for example, is external debt because, of course, countries like China buy those bonds. I can go and buy those bonds. You can go and buy those bonds. That's external debt. Yeah. That's debt that the countries use to leverage outside the country, and it owes to external parties, basically.
Great, thanks, Ian. I hope that helps you. Andrew was saying, how were the banks able to get away with this for so long? I think, Andrew, you were referring to the way the banks have controlled the financial markets. Peter says, when I've got it, how can I spend it and what can I buy with it? This is referring to Bitcoin, essentially. Yep.
Well, I've got a slide here that shows you... I'll just try and find it quickly. This is earning, this is preventing. So these are places accepting Bitcoin. You can click on these 4 links, and they will show you all the places you can spend your Bitcoins or your cryptocurrency.
Fabulous. I mean, I've read the odd article about people conducting 1 or 2 property purchases in Bitcoin and things like that, grabbing the attention, but it's certainly not commonplace yet.
No.
There we are. So there's some helpful links.
One of the things I use a Skrill card, SKRILL, and they will allow you to send cryptocurrency to the card, charge it, and it's like a normal MasterCard. Then you can spend it anywhere.
Right. Yes. I mean, apparently in a few years we're all just going to be paying for coffees in Bitcoin. So I need to get my Bitcoin wallet. Ian says, what is the difference between Bitcoin Cash and other types of Bitcoin? How do I know which instrument to trade? So essentially, the Bitcoin and Bitcoin Cash. Could you explain?
Yeah, so Bitcoin is, I was discussing earlier that the downsides are it's quite cumbersome, it's quite slow and quite expensive at times. Bitcoin Cat, and that is because it's got a really small 1 megabyte block size, so only a certain amount of information can be kept in that block. Bitcoin Cash is the other extreme. It has very, very, very large blocks of 8 megabytes, so it can contain a lot more information every few minutes. So as a result, it can process transactions a lot quicker and at lower fees because it's potentially easier to mine. It's supposed to be easier to mine. So that's the way that works. The problem with it is of course, it's not as widely accepted. It's not as widely supported by the community. And so it also has its downsides. And yeah, you just have to decide which one is up to you. What instruments you decide to trade. I would only ever trade things that are really in the top kind of 100 on CoinMarketCap. When you go down below that, they're very risky. It's like trading penny stocks but on steroids. And the other thing that I would always look for is volume. You must have volume in the coins that you trade. If there's no volume in the coins, it means you pay really wide spreads between the buys and the sells. And so you can lose 5, 10, 15% before you've even started. And what I would recommend is volumes above sort of $10 million a day at least, maybe $30 million a day. And trade those coins. You can get nice liquid markets and they will give you really tight spreads between the buy and the sell price.
Okay, thank you. Ken says, I fundamentally disagree with the proposition that a decentralized organization is less susceptible to corruption than a centralized one. Controls should exist at all levels, and in a blockchain organization, it would be up to the lower level peer groups to mitigate against it.
I completely agree with that statement, actually. I think that the idea is that blockchain is kind of at the extreme at the moment, and it's very decentralized and very. It's a bit like anarchy and chaos. And what needs to happen is there needs to be a kind of a balance between the two. There needs to be regulation put in. But what I want to see, and this is just my opinion, is I want to see decentralized regulators where the communities that are being served are regulating themselves on a blockchain. So you can, it's open. The reason that we have centralized regulators at the moment is because we've got no way of demonstrating the openness without doing audits. And then when you get into audits, private and public audits, they're already corruptible centralized actions, right? Whereas because of blockchain technology, you can make all this stuff public. And so, yeah, I think you're dead right. An open blockchain is corruptible, but once the right regulations come into place, it should give it the credibility it requires. And then we can hold those regulators to account on blockchains as well to make sure they're not corruptible.
Yeah. One final question maybe from George, and then we'll need to wrap up if that's okay. He says, how safe, it's not George from previous, by the way, this is another George. How safe is crypto exchange? How safe is a crypto exchange? And how can you trade with crypto if it's in your wallet for safety?
Yeah, it's a very good question. The exchanges are not safe. Do not trust them. Do not hold your currency on the exchanges. You can quickly move currency there, buy your currency or exchange, and then move it off. And this is a picture of a hardware wallet. So these things you plug into your computer, and they never expose your private keys to the internet, so they can't be hacked. So that's what I always do. I always have a hardware wallet that I buy on the exchange, and then I send my currency to the hardware wallet, and my currency then is with my person, and it's not with anyone else. And you can make copies of that as well. So if you lose it, you can find it somewhere else.
Yeah, I mean that sounds like almost a risky thing. Just if you lose that, then it's gone. So
once you become your own bank, you become your own banker. So you have to start behaving more like a banker than like an irresponsible person, let's say.
Well, Matt, thank you very much indeed. We're getting some great response to the thing. Do you have more? I've got the feeling I'm cutting you off here midstream, or are you able to wrap up just in the next minute?
Yeah, I mean, I can wrap up straight away. There's a lot more you can see from the other slides. There's a lot more information there I was hoping to go through, but of course time's run out, and I could speak for hours on this stuff. But basically, to wrap up, I'm available on Steemit, steemit.com @Starkers is my handle. I run with a couple of other guys. We run the world's first decentralized marketing and promotion agency called Promo Steam. And the handle for that is @SteamAmbassador. Our website is promosteam.com, where people all over the world are getting paid to promote Steam in a decentralized way. It's the first of its kind, and it's changing all sorts of people's lives all over the world at the moment. So that's sort of documented on there. If you do want to get involved in that, it's not necessarily trading, but it's certainly a step into the cryptocurrency blockchain world with a practical application. And then what I wanted to say was, I've got all these links in this presentation. I'm happy to give them to you, but if you can email me at matthew.starkey@gmail.com, I will then reply with the useful links list, so you can just click on them and go to all those things that I've shown you automatically.
Fantastic. Well, I am being ordered here by everybody in the room. Maverick, Ian, Eric, very informative. Invite Matthew back in the future. Fantastic presentation. Very interesting, profound explanation from Eric. Looking to learn more. Thank you so much, sir. There we are. So, Matt, we're going to have you back, I'm afraid, by popular demand. Thank you for joining us. It has been interesting to see it. It's moving so fast. We need to just try and keep up as much as we can. You've helped us today to do that, to shine a big light on it for us. So we appreciate it. We're sorry to have to cut it off now. We've got another speaker waiting to get going. But in the meantime, thank you so much. And I'll transfer any links on as we normally do. Post the event. And of course, this is recorded, everybody, so you can go back and watch the recording again later on this evening. And you can get in touch with Matt through myself. Thank you. I'm going to take the presenter role back from you, and we can move on to our next speaker. But again, Matt Starkey from Promo's team, thank you very much for joining us.
Thank you.